Hello and welcome back to an SF Weekly Wrap-Up episode. My name is Kai Hoffman. I'm the host of Soar Financially, and it's my pleasure to sort of guide you through what has happened this week. I've taken a ton of notes, probably way too many. Thought way too hard about this weekly episode, but a lot has happened this week. The Fed finally cut, or no, not finally, but cut for the second time this year, the interest rate by 25 basis points, but also announced the end of QT. And we'll get into that, what that means in a few minutes here. But that is quite interesting because it means it's a complete change in the liquidity regime, and we'll have to figure out what that means. What could the impact be? Is QE back? We'll take a look at that. At the same time, President Trump has been touring Asia. Lots of tariff news coming out of that. A lot of deal news, especially the deal with China, of course, as if interest here to us. We will take a closer look at it. What does it mean? My opinion up front, it's a shaky truce. We'll have to see how that develops over the next 12 months, but we'll dive a little deeper into that. And then, of course, we'll take a look at gold. How did gold react to the Fed decision yesterday? Where are we trading at? As we record this here on October 30th at about 8:37 p.m. European time, gold is trading over $4,000 again. It's shaking off the beating that it's received here recently and is rallying higher. We'll dive into that as well. What is driving the rally now? What is driving the price increase in gold back over the $4,000 mark? And then, if we have some time, we'll also take a closer look at copper, at least at some of the price action. I do want to highlight the Agnico numbers that just came out as well, meaning the production numbers. What are they producing gold for? What's the margin? What is the trend here as well? So lots to discuss. I'll probably speak way too fast, as I always do. I do apologize. But YouTube has a function where you can actually turn or slow down the speed. Maybe set it to 0.75. But I'll do my best to speak slowly. I'll keep reminding myself. I'll keep training myself to do that. Before we dive in, before we start here, kindly hit that like and subscribe button. Helps us out tremendously, and we much appreciate it. Now, let's start maybe with a quick overview of the calendar that I had that prepared here, the economic calendar. Let's take a look. What kind of data, what were we looking at this week? Let's add it to the stage. It's not too much. We had the Fed interest rate decision. As you all know, the U.S. government is still shut down. I lost track of what day it is, to be honest, probably week 4 or 5. It'll be interesting to see when the government does come back. Are we missing them right now? Is anybody missing them? The only comment we've gotten is, we'll talk about when we talk about the Fed, is that it's driving, that the Fed is driving right now like they're driving in fog, meaning they don't have data to navigate. They have private sector data that they're using, but of course they're missing the official statistics. We had the Fed interest rate decision here on Wednesday. Germany and Europe put some GDP numbers out as well. Actually, like GDP growth rate quarter over quarter in Germany, flat. Year over year, 0.3%. Eurozone, or the economic area there in Europe, 1.3% slowing down. It was 1.5% actually, so it's not looking too great. And then U.S. president, and you can see it at the bottom here. I'll scroll down just a second here. You can see that U.S. President Trump and China President Xi meeting, of course, today as well, or this morning on Thursday morning, which was quite important. Tomorrow we'll get some core PCE price index numbers, inflation rate, year-over-year flash numbers out of Europe as well. But again, nothing too crazy. Let's focus on the Fed decision. What did Jerome Powell say yesterday? We watched, of course, the press conference for you, so you don't have to sit through it. Although I find them quite entertaining these days. I find them quite interesting. Let's take a look.
The Federal Open Market Committee decided to lower our policy interest rate by a 1/4 percentage point. We also decided to conclude the reduction of our aggregate securities holdings as of December 1.
So there we go. That one is that second part is almost more important than the 25 basis point cut. Lots of interesting things were said actually at this Fed meeting. It wasn't overhyped, but the end of QT, that is really interesting. And I've taken quite a few notes on that topic because I was trying to understand, like, what does that mean and how can I really translate it so that it makes sense when we're looking at it. We have to understand that QT, the Fed was running only a QT of like 5 billion, and keep in mind their balance sheet is trillions and trillions of dollars. So even 5 billion in QT meaning and just liquidity tightening. This doesn't really was a drop in the bucket here, quite honestly. But they tried they were shrinking the balance sheet. They're done with that now. So liquidity, they stopped tightening. Is this QE yet? No, but it's a step in that direction. It is not QE just yet. I've got a couple things prepared to show you. One is, of course, cross-border capital. Our good friend Michael Howell over there is absolutely the king of liquidity. And he shared before stop sharing. Oh, sorry, I got to remove the video. There we go. He also questions: is this the start of QE? It is not yet, although they will be reinvesting some of the money that becomes free from expiring mortgage bonds and everything else they hold into short-term treasury bills. So that's interesting, but it's not QE yet. And the funding conditions are, of course, easing, but I'm not sure how much of a token amount that is. We will have to see what that exactly means. It's not QE yet. I think that's the key message, though, that we're taking away from here, right? What are some of the effects? Of course, bank reserves will stop falling. The funding stress eases a little bit in the repo markets. As we know, the repo facilities, the pool of repo facilities has shrunk quite a bit. The dollar may weaken slightly, although we're not seeing that right now. Actually, as we record this, the dollar is actually fairly strong. The DXY ticking back up over 99 points. Gold and silver are supposed to benefit as well. Increased liquidity could be a hint at increased inflation. So we're seeing gold benefit, and I think that's what the market is sniffing out today as well. Maybe one of the reasons gold is rallying as we speak here. Silver is doing okay as well. Gold-silver ratio about 82.5. We'll take a closer look in a minute here as well. Well, Powell is pivoting, but he's really not admitting to it. It's not QE, but it's also not tightening anymore. So we'll see what the next steps are. We'll have to see what the government shutdowns it sort of brings for us in terms of data, and we'll have to pay attention to that, of course. So how did the markets react? Let's take a quick look. I have queued up the gold chart, which of course is interesting. Let's take a look at the 5-day. Let me share here. So yesterday, of course, during Jerome Powell's speech, where are we at? There we go. The dollar, the gold price dropped. We had a really positive day yesterday. Gold wanted to run, and we ran up to 40.29, 40.27 yesterday, intraday. But then the press conference happened, and Jerome Powell was saying, "Well, we don't know yet. It's not a foregone conclusion that we will be cutting again at the next session." And gold started to drop. Because we all know gold doesn't pay a dividend. Higher yields, higher Fed funds rate means higher yields in the U.S., and gold doesn't pay a yield, as we all know. So the gold price here, let me. Oh, I'm so good with this, quite honestly. Here, trend line. That's what sort of what I wanted to show you yesterday, just so you see what I'm talking about. Gold is back up 40.25 as we speak. But back to Jerome Powell here real quick. Let me go and queue up another clip that I've prepared for you as well.
Decided to conclude the reduction of our aggregate securities holdings as of December 1.
Oh, which is quite important, actually, because he's giving the market fair warning that he's done tightening and giving another month to do so. What I wanted to mention, actually, is probably then this clip here.
The policy rate at the December meeting is not a foregone conclusion.
That's it. Foregone conclusion. He's really taking the wind out of the sails of the market, because we'll take a look at the Fed watch here. And because Jerome Powell says, like, well, we don't know what we're doing yet. It's not a foregone conclusion that we're going to cut again. He said that a few times during this press conference. So he's really pumping the brakes. And if we look at I hope this is showing up. Let me remove this here. Let me add this to the stage. If we take a look, only 68.8% of the market participants expect a cut at the next meeting, which is, by the way, happening on December 10th. We have 40 days and 22 hours. So let's say 41 days until the next Fed session. 31% say, well, we might stay put here this year. Let's see how it goes. What I always find interesting is the probability overview. 1 week ago, it was 91% said that we'll see another cut at least, or even 2 cuts, actually, if I look at this target range. And that was 1 week ago. There we go. So really, really interesting how Jerome Powell pumped the brakes, because the market is reacting to that. Let me show you the S&P 500. Well, it is down. The market had priced in another cut, and now the Jerome Powell is telling them, well, the second cut might not be happening, and the market is now selling off. Also, I think the conversations in Asia during the tariff deal were too exciting for NVIDIA. Let's take a quick look at the NVIDIA shares as well. I wanted to mention those later. Speaking about the tariff deals that President Trump has been able to negotiate, but NVIDIA down as well after it rallied quite a bit based on news that Blackwell chips might be on the table for discussion with China, which would be, of course, a huge revenue driver for the company. Are they still over 5 trillion in market cap? No, they're not. They're down below 5 trillion again. It was the first company in history to reach that 5 trillion market cap level, which is absolutely astonishing, absolutely insane to see those numbers, but good on them. Good on them, and good on the investors that have put in money with them, of course. Well, we talked about the rate cut. We talked about persistent or a foregone conclusion, end of QT, and maybe I have one last clip queued up here. Let me show you that one as well with Jerome Powell, and that is in regard to the tariffs, which is a good segue to our next topic, meaning the Asia trip by President Trump.
Basically, you've seen goods prices increasing, and that's really due to tariffs. And that's compared to a longer run trend of very, very mild deflation in goods. So that's moving inflation up.
So you hear him say, well, the tariffs are to blame for some of the inflation. We're sitting at 3%. Let me bring that up real quick as well. Of course, inflation is trending higher. We're seeing that here ever since April, where we reached an inflation. And that's all the official inflation data. Okay, please don't crucify me. That's the official inflation data that we're being served by the Bureau of Labor Statistics. And for September, we got 3%. Okay, 2.3% back in April. We had the Liberation Day turmoil, and now tariffs are at 3%. And as you just heard Jerome Powell say, well, part of that is, of course, goods inflation that we're seeing due to tariffs. And he said without the tariff inflation, we'd probably be closer to their 2% target. Hey, if you want to believe that, sure thing, but it sounds a bit unrealistic to me if you ask me. But hey, what do I know? I'm just a stupid podcaster commentating on these things. So yeah, couple things as well, maybe as a response to the tariff news. Sorry, not tariff news. Fed news yesterday. The DXY is trending higher. Looking at maybe let's take a look at the 3 months. It is back over 99.5. Why? Why is the dollar higher? Like, why does it make any sense? We're not getting a lot of data out of the US, and yet the dollar is rallying, especially here. Let's take a look at the 5-day. It's rallying quite a bit. Almost 100 basis point move here, or 100 points, moving higher up to the 100 level. But why? Well, yields are staying higher, and they might stay higher for longer, which is good for the currency, because that means other currencies are losing versus the dollar, because you get higher yield in the US if you park your money there. Why would you go to Europe for 2.15% if you can get 4 in the US? That's twice the yield. You can do the math, right? Maybe at a neutral rate, meaning matching the 2-year, then we'd be maybe at 3.5. But we're still not there, so it's still at least dirty short in the laundry. That's why money is flowing in that direction. You can see it here yesterday as well. The second Jerome Powell, like it already started moving in the afternoon, but the second Jerome Powell started the press conference here, or the FOMC statement, and then the press conference, the dollar just shot up and stayed elevated. So really interesting development, because it sounds illogical, but if you think about it, it makes sense, because, well, you get higher yield, right? All right, that's the Fed, and the Fed topic sort of wrapped up. Part 1. I've got 4 pages prepared for you, so bear with me here. This is going to be a longer episode. Lots of notes, because lots of ground to cover, as I mentioned. So we had the Trump Asia trip. Really interesting, numerous stops along the way. He stopped in Japan, South Korea, of course, as well, and announcing a ton of trade deals. $350 billion deal with Japan, $200 billion supposed to be invested in cash, but $150 billion shipbuilding corporation cooperation being announced there as well. And a bit symbolical, but really, really interesting and fun. Where is it? I had it all queued up. Let me find it. There we go. In South Korea, President Trump got a symbolic or replica of a crown by South Korean President Myung on Wednesday. I thought that's actually hilarious that they're giving him. And I know Trump likes poking at the No Kings protesters as well, all in good fun. Everybody has a right to protest. Let's keep that peaceful as well. But really, I like the humor. I really like that humor. Let's look at some of the details real quick. Let me see the numbers. I was looking at them. So, $350 billion trade deal with the U.S. Fantastic. $350 billion consisting of $200 in cash investment, $150 in shipbuilding cooperation. Personally, I don't know how the shipbuilding part works because I thought there's private enterprises are running that. I'm not sure how the Korean government is going to push them to do that, but it is positive. That's another victory for President Trump, I have to admit. When it comes to those tariff deals, he had $650 billion out of the EU, as you remember, for energy purchases, and it seems like he's getting a similar, or not a similar deal, but he's getting an energy deal out of China as well. There's discussion of China buying oil out of Alaska, oil and gas from Alaska, which is interesting. There was one more thing I wanted to show you in this article that I'm just scrolling down on, and where is it? There's too many words in this article. Who reads all of this? Where is it? There was one interesting thing. It was about gold, and I wanted to show it to you. Now I can't find it. I should have bookmarked it better. I do apologize. Too many words. Too many words in this article because it was about the Golden Crown and how President Trump loves gold. But oh well, we'll take it. Still fun. But let's talk about the deal with China. It is an interesting one. Because personally, and I've said it in the intro, I think it's a very shaky truce. It's only a 12-month tariff sort of truce here. Trump's shaving off 10% in a deal on fentanyl and rare earths. As you remember, the Chinese flexed their muscles just ahead of this meeting by saying, "Hey, well, we're adding export curbs and restrictions on rare earths," and of course, that was just to flex and play the game. They're great at poker, aren't they? But he says he's cutting tariffs on China down from 57 to 47%. He said, well, Xi has done great on the fentanyl trade, so he's giving them a bit of credit. We're still lacking some details here on this truce, and the CNBC actually shares that sentiment as well. It's vague in quite a few key areas. Trump said, well, they're buying some soybeans from us, some other agricultural items, but we're still lacking on sort of commitments here on the like as I hinted at, the large amount of oil and gas from Alaska. It's still a deal needs to be reached here. That's what it says. And then, of course, the president said he discussed the export of NVIDIA chips with Xi and will speak with CEO Jensen Huang about it. That's the CEO of NVIDIA, of course. But the discussions did not include the Blackwell graphics processing unit, the GPUs, which is really interesting because before the meeting, apparently he brought that up, that Blackwell might be on the table. Maybe he did not have to play that card. Maybe kept that ace up his sleeve for the next conversations. We'll have to see, because those Blackwell graphic GPUs are the most advanced, of course. And there was discussion that maybe a downscaled version could be sold to the Chinese here. It is an interesting topic, the whole AI and tech debate that is going on. I had a discussion with Daniel Lakai here on our channel about that, and it gave me the idea that the US, like while in the past used to reign supreme globally due to its military strength, might now choose the same path for AI and tech supremacy, which is an interesting one. That's hence talking about the US dollar and whether the US dollar might lose or the de-dollarization trend might lose any steam here, and the US dollar might stick around for longer than we might anticipate here. We've been calling for the death of the dollar for a while now, but it hasn't happened. So that's just my 2 cents on that topic. It's something I want to explore with my future guests as well, how the AI and tech revolution is really keeping the US relevant, for a lack of a better term, and maybe keeping them at the forefront of global initiatives when it comes to that rollout. It's an interesting topic that we'll discuss moving Forward. One thing, side note, I couldn't find a lot of notes on it, but the Russian oil sanctions are interesting but they were seemingly not discussed with Xi there in South Korea. So I'll keep an eye on that, and we'll update you when I see anything that is of relevance. Now, that's topic number 2, Trump's Asia trip. Done. All right. Let's talk gold. Let's talk precious metals. The World Gold Council recently, or just yesterday, I believe, let me check the date, today, October 30th, released their gold demand trends for Q3 2025. I definitely want to share that with you because it has some interesting statistics in it. Let's share this tab. Let's make sure this is on screen as well. And let's bring it here. There we go. Demand trends for Q3 2025. Sounds huge, but it is, of course, as expected. Gold demand increased over the counter 3% year over year. Okay, great. 1,313 tons, highest quarterly total in their data series. I'm not sure how far dating back that is, but it is significant. What I wanted to highlight, of course, a few things. Gold price hit 13 new all-time highs in Q3. That is impressive. That is fantastic. A 16% increase in Q3. Gold supply rose 3% year over year. Okay, great. I want to touch on recycled gold here in a second, but the investment demand, of course, for gold is really, really something we should touch on. So that's the executive summary done here. I'm trying to think what the best order is. Yeah, let's go take a look at supply because I got a couple interesting things here. So mine production has grown 2% year over year, or 8% quarter over quarter, which is also a record. So of course, higher prices probably push supply, but it's not that easy on the mining side, as you know. It takes forever to bring mines online, and here's some interesting mine production overview statistics. Where's the growth coming from in supply? And please keep in mind, supply and demand on the gold side does not necessarily push prices. As you can see, Canada's production has increased 20% year over year, yet the gold price in Canada is the same as everywhere else in US dollar terms. So the supply doesn't really make a difference here, although it was a bit of a rubbish statement, but you know what I'm trying to say here. Really interesting, of course, 4 mines went into production. Big mines went into production: Blackwater, Cote, and Greenstone. I think Greenstone is the second largest mine in Canada, if I'm not mistaken now. And Blackwater is also producing at a very low end all-in sustaining cost. Ghana, 9%, Australia, 6% year over year. Even Russia increased year over year production by 3%. And then, of course, Indonesia dropped 37% as a result of the suspension of operations at Grasberg. You can see that here. We had that massive collapse with a fatal incident, unfortunately, that is really pushing down production. Supply, there was one interesting topic I wanted to say in terms of supply, and that is the recycled gold part. A lot of arguments I've been hearing lately is well, gold is so high, and what about recycling? Is that picking up at all? Of course, it has 6% year over year, but the response is surprisingly muted, according to this report. I'm not surprised. A lot of people are still waiting out for higher gold prices. Recycling volumes were actually down 1%, so that is interesting, despite a 16% rise in gold price. So you can see people are holding on to their gold. And there's one other line. I need to work out on how to bookmark this a little better. It was one interesting sentence, and where is it now? Why don't I see it? Recycle gold. Hold on, there was one word I was looking for. And of course, it's not in this slide. Let me see if it's in the executive summary. I do apologize. Of course. No, I can't find it. It was such a great sentence. I apologize for that. I hate apologizing the whole time, but there was a great sentence in there because it was talking about the supply and the recycling, the setback here in recycling being a healthy. Let me read this real quick. Okay, I'll pause it. Apologize. I can't find it anymore. I had such a great part bookmarked, but recycling. Okay. Encouraged restraint in recycling activity in anticipation of further gains, but it's holding back from liquidating their assets. This is a healthy move according to this report. Maybe it was in the PDF, not in the text. I do apologize for that. I've read that here, but it just shows that the restraint on the recycling is a positive move in the current environment that we're in. Investors and people that hold gold are holding on to their gold before recycling it. And one last thing I want to show you from this report as well, of course, is central banks, big topic that we've been discussing. They've jump-started this rally. Year-over-year change in terms of central bank buying, of course, up 10%. A lot of countries like Poland have mentioned that they want to increase their purchases. Central Bank of Brazil is a first-time purchaser since July 2021. Fantastic, new player at the table. Please welcome. Thanks for joining us. And this graphic, I showed it last time, and I still haven't figured out why Germany is a net seller here in this graphic. It's blowing my mind. So we talked about the Fed reaction to the gold, or the gold price reacting to the Fed. Let's take a closer look here at this chart real quick. I still have this in here. I had it up earlier, and gold is rallying back here now. Let's take a look at the year to date. Yeah, we had a nice run up, or nice. It was an insane rally, if you ask me, in a good way, using that term. A correction here was healthy. We've seen it. It's bouncing back. We'll see if it's a dead cat bounce or if there's more to it. I'm not as I said before, I'm not a technical analyst, so bear with me there. Let's take a very quick look at silver as well. It is right here. Gold silver ratio, as you can see, is at 82.75. So it is coming down again. Real quick, silver also bouncing back here. Same level, same move as we've seen in gold. 48.90 right now. It's looking like it's making its run back to 50. To that important $50 mark. It's just a mental hurdle, but it is an important one, right? So we all know what that means mentally for us if we reach that level. So we talked about gold. We talked about the Q3 results. We talked about the Fed reaction, or the reaction to the Fed, of course. Now, at the end, I quickly want to highlight the numbers produced by Agnico Eagle in Q3. This is the guidance. I had this down here. I was looking at the guidance because I was looking for something, but in Q3, so gold production 866,000. They sold about 870,000. Production cost, total cash cost $994. All-in sustaining cost $1,373. If you look at the 9 months ended, we're trading a little higher, and the costs have escalated is the wrong word, but they're definitely higher. And it is interesting because it is due to the gold price. The costs have exploded. Are not exploded. I'm using strong language here. The costs have increased at Agnico. They're still absolute top tier in the cost category. They're still about $200 lower than Newmont, for example, in their all-in sustaining costs. But due to the higher gold price, their royalty costs have increased quite significantly. And I think that is something worth mentioning because, well, with a higher gold price, they got to pay higher royalties, and that's why we have to look at it here. Also, their all-in sustaining costs, as I said, were $1,373, and they're selling gold at about 3,400 and where's the number again? Too many numbers. Who puts out press releases like this? You can't even read this. I think it was 34.73. It was about $50 to $60 lower than actually what Agnico achieved. Oh, 34.76. There we go. 34.76. Of course, $1,000 higher than in Q3 2024. Another $250 higher than on average in the whole 9 months here. But still about $60 lower than what Newmont achieved in the same quarter. They might have to change metal traders. But my point is, this is fantastic. This is great. The only thing it's tough to point something out, something negative out here. This is the guidance for 2025, and due to the higher gold price, they will probably be exceeding their cost guidance on the downside. Meaning, we've just seen it. They're already $100 higher on the all-in sustaining cost per ounce, so they might actually have higher all-in sustaining costs, and they've been saying that here as well. That There's a whole ton. If gold prices remain elevated for the remainder of 2025, total cash cost per ounce and all-in sustaining cost per ounce in 25 are expected to trend towards the top end of the guidance range, and the top end is 1,300. But I think we'll probably be higher at the end of the year if we remain above 4,000. It's a positive problem to have. Like, I'm not mocking them, but they might not be able to meet guidance here. Sounds crazy if you think about it, because they're still producing over $2,000 in margin. So now that was that, and I've run out of topics. I think I've written. Yeah, no, that's it. I've run out of topics, and I really appreciate everybody watching. I hope this was insightful. Lots to chew through. Hope lots of content to put around, and 30-minute monologue. Wow. If you appreciate this, if it was useful to you, please hit that like and subscribe button. It means a lot to us. I'm trying to put these together while I'm on the road. I'm currently on my way to New Orleans for the New Orleans Investment Conference hosted by our good friend Brian London. We're media partners there. We're looking forward to interviewing a lot of exciting keynote speakers. Rick Rule, Jim Bianco, Danielle DiMartino Booth are just a few top of my head that I'll be chatting with in person that I'm really, really looking forward to seeing again. And can't wait to interview them, get them in front of the camera for you to get the latest reaction, especially from Danielle, for example, on the Fed decision. What does it mean? Where are we headed? Is QE coming back? So thanks so much for tuning in. Hit that like and subscribe button, as I said, and we appreciate that. Take care out there. Bye-bye.